if you get high double-digit inflation, interest rates track inflation pretty much. So you're going to have high double-digit interest rates. So keep in mind, I was a equity pension fund manager back in the early 80s when we had 18, 19% interest rates. Actually the T-bills got up to 21%, and the long bond got up to 15%. I think we're going to exceed those this time around, because if inflation goes to 25%, you're probably looking at something close to that for T-bills, and high teens, if not 20% for the long bond, and for the 10-year. So as I say, and I've said this many, many times over the last several years, the equation, you can't come up with an equation that balances when you've got high double-digit inflation and high double-digit interest rates and budget deficits or a debt load that's through the roof. And as you rightly say, not everybody gets this. I talk about the worldwide debt because it's a number that I can talk about. At least it's been somebody, there's numbers out there that are this. There's supposedly 330 trillion plus in overall debts, sovereign plus private debt. That's the 330 trillion in the world. I think that could go to 500 trillion because of the bust, because what you're going to have in the bust, not only money printed, but you're going to be creating new debt to go along with that for fiscal expansion, right? Because they're going to be bailing out everything in sight to hold the system together. So you could have 500 trillion in debt. You could go from what seems ridiculous at 330 trillion. You can go up another 50 or 75% from that. And at the same time, a few years out, be looking at double-digit interest rates. We can't fund our debt. We can't service our debt at 5%. How the hell are we going to service it at 15% or potentially 20%? It won't happen. And people say, oh, they'll print their way out. That's what they just did. They printed their way out of the bust. There's a point at which, and this is, I'll have the timing wrong, I guarantee you, because it takes longer or it happens in a different timing. But at some point in the next cycle, you will see the Fed will be out of the game. The printing press will be shut down, because there's a point at which you cannot print more money, because it instantly creates more inflation and higher rates than you just had. So it's not just diminishing returns; it's negative returns. You're every time you print more money at that point in time, when we cross over that point, you're going to be actually behind even further, because that money instantly goes into even higher inflation, higher interest rates. So that at that point, the central banks are out of the game. The printing press is shut down and shut down for a long time, and all of a sudden you realize there's no there. I mean, we don't have a system. We can't go to the capital markets, because the capital markets will say, you can't service the debt. We're not buying any more debt. You all of a sudden have to live within your means. And what happens, kind of like Bernie Madoff, the Ponzi scheme just unwinds very quickly. And that's by the mid 2030s. That's what I think we get is, again, this isn't just US, this is systemic worldwide collapse.
Now, David, and we have discussed this a little bit in prior interviews, if that were to play out as you describe in about 7 or 10 years, you're making it sound, as I queued up the prior question, pretty horrific. But there's a but in there. The but is it's happening around the world. America still, I think, has contract law. I was going to say the word secure borders, kind of. Oceans on both sides, the world's best farmland, tremendous oil reserves, Silicon Valley. Maybe we will be the one-eyed giant in the land of the blind. Where, if I have money and resources, not that I want to run, but where do I go? And do I just stick it out? And this is the best place to be.
I will say this, between now and that period, whether it's 2035 or 2037 or 2034, I don't know, But between now and then, there is another cycle. If we print that much money in response to the bust, the game changes. Every cycle, and I've been doing this for 53 years, we've had many economic cycles, many market cycles. Each market cycle, meaning, 73 to 80, 82 to 90, 93 to 2000. Each cycle had different leadership. So obviously we know the 90s into 2000 was tech and .com. In the 70s it was oil. This cycle we're in now, it's AI, it's tech, it's semis, it's tech land mostly, but it's also other things. But the next cycle is going to be very different than this one in terms of leadership. The next cycle is going to be commodities and industrial, because we're doing a lot of capital expansion, reshoring, et cetera, and we obviously the build out of the power grid and AI. It's going to be all about commodities. I believe oil will go to $500 in the next cycle. I think it'll go to 30 in the bust, and from 30 to 500 in the following 7 or 8 years. Silver will go to 1,000, gold will go to 20,000, copper will go to who knows $20 or more, from probably more. Natural gas, which is $3 or $4, $2 or $3, could go to 50. It's going to be a commodity cycle. So as bad as it's going to be, because the broad markets, if interest rates are going from zero in the bust to potentially 20, let's say 20%, PE multiples work reverse of that. That's not a time to own growth stocks. That's not a time to own the S&P index, because multiple compression is going to be hitting you pretty hard. That's a time when you want to be in the lead stocks that can outperform inflation. And the only things that will have that kind of pricing flexibility to be able to outproduce inflation are mostly commodities, along with some industrials like Caterpillar that services commodities. But it's going to be very hard to own pharmaceutical companies or steady growers like food companies or Procter and Gamble or those, because inflation is going to be going at 20%. Those stocks are going to be going straight down. And again, not in the first year out of a bust, because the first year everything goes up. Let's say the S&P drops 80%, which is my call, is that we could see in the bear market, peak to trough decline of close to 80%. If we get that let's use 10,000 on the S&P. If we get an 80% decline, it takes you to 2,000. In the ensuing first year out of the bear market bottom, maybe even the first 18 to 24 months, you'll be in a cyclical bull market. You could quadruple out of that 2,000. You could get back to 8,000, right? That still will be far short of the 10,000 peak of this cycle. So we'll be in a secular bear market, but a cyclical bull market at that point. But you'll have lower peaks along the way over the course of the next several years. And so the only winners that will continue to make higher highs will be in the commodity sector, I believe. So energy stocks, precious metals, even agriculture probably will have a big cycle. So my point in all that to say is that you've got at least one more cycle to get your house in order, get prepared for what's coming after that, a systemic collapse. And I would take issue a little bit. I don't want to be too gloomy because I can be wrong about all of this, but I would argue that, keep in mind, we've been the winner from the Great Depression on through this, right? But we're starting to kill the golden goose. Oh, we got socialists coming in. We can talk about that later. But we got people now embracing communism in this country. We've got, and frankly, sticking to just the macro, we've spent for the last 80 years. The Fed has been the lead dog in all of this. When there's crisis in the world, who comes to the forefront and fixes things? Who leads the fix? It's the Fed. Who prints the most money? It's the Fed. The problem is, if we're going to see a systemic collapse, it may mean that the one that's been the biggest fixer is also the one that has the biggest problem when we unwind this. So I'm not so sure that we're the safe haven anymore at that point. We will be up until then. I think in the bust we will be, but in that final systemic collapse, which I call the
David,
unwind of the Ponzi scheme that's been in place for 80 years.
okay, you might be right. I love it. We're having a conversation where we may have some disagreements, and that's awesome, by the way. Uh, However, you got to give me within 10 years who might be that new, who's that phoenix that has potential to rise out of the ashes. And you could give me something that people may be aghast over. I don't care. Maybe it's remote like New Zealand. Maybe you think it's Russia. I have no idea. But who do you think could be several countries in play for that? Or boy, I'm making this more complicated than it needs to be. Do we go to multiple regional hegemons and the US still has our, Monroe Doctrine here in our part of the world, but there's something different in Asia, AKA China, in the Middle East, in Europe, and other parts of the world? A convoluted question yet again, but David, I kick it off to you.
I'll start it with the caveat that chances are a lot of this stuff I'm going to be wrong on. To try to see out 5 years is tough, or even a year is tough. To try to see out through what we're describing here, what I'm describing here, is almost impossible to know exactly what comes out the other side. But my fear, I'll start with the negative. My fear is that there's a vacuum if the world collapses, if the financial system of the world collapses, and it's it doesn't mean just the Western world. It means China's got bigger problems than we do. They may look like they're in the driver's seat in terms of growth and things at times, but boy, they have a big problem there too. So this is going to be worldwide, and I worry coming out of this that it's going to be a vacuum that could be filled by because of the agenda that's been going on for decades now of new world order, what I call code for communist takeover of the world, one world government, all of that. My fear is that they fill the vacuum with that the solution we come up with is we got to all get together and this is going to be run out of some centralized place. That would be the worst of all worlds. The other possibility is kind of the Austrian school possibility, which is yes, they think it happens now. I mean, they don't believe we have another cycle. I think the Austrians think we have a reset coming in this bust. But if it's then, there is a possibility that the slate is clean, all kind of like our hedge fund friend just had happen. The slate's clean, everything goes down together, and you start over, with a hard money policy. You start over with discipline again, and you learn from your mistakes. I think that's remotely possible. I don't think it's a likelihood. I think more likely we're going to see some sort of totalitarian type of response. I say it with a caveat, which is I could be all wet. It could be dead wrong. So I don't want people losing sleep over that part of this interview because it's too far out there. There's too many things between now and then that could happen differently than I expect.